Yes. So company purchased rupees 1 lakh worth of machinery for which 9% debentures were issued as purchase consideration. Nine percent debentures were issued as purchase consideration. So now I have added one more. So out of 2 lakh debentures, company is issuing 1 lakh debentures for purchase consideration. So to the extent of 1 lakh, there will be no effect in cash flow statement because it is consideration other than cash. Therefore, there will be no effect at all. Fine. So in that case, what happens here? Proceeds from issue of debentures. Now ledger account, everything is right. Ledger account, again, instead of buy bank, fine. Instead of buy bank, you will have buy vendor 1 lakh rupees, buy bank 1 lakh rupees. Want me to show it to you? Want me to show the ledger account to you?
Please, ma'am. Please, ma'am.
Yes. So I'm just clearing the additional information. Okay. You have noted down, right?
Yes, ma'am.
Fine. So you open 9% debentures account. Buy balance brought down 10 lakh rupees. Buy vendor account because you're issuing 1 lakh worth of debentures. Buy vendor account 1 lakh. Buy bank 1 lakh. Fine. To balance carried down 7 lakhs. So the balancing figure will be to bank. Balancing figure 5 lakhs. So what happens to the extent of this 1 lakh? There will be no effect in the cash flow statement because it is issued for purchase consideration. There will be no effect of this in the purchase in the cash flow statement. Fine. So to the extent of 1 lakh alone, there will be there. So that will be proceeds from issue of debentures 1 lakh less discount 10,000. So 90,000 will be inflow from financing activities. Okay.
Okay, ma'am.
Can you clear, Lavanya?
Yes, ma'am.
So one single topic with this many possible adjustments. Here again, some more if we want to crucify the students, we can crucify in any way. However we want to test, we can test. You can even bring in conversion concept. See, we are not deviating anything from the syllabus. Fine. So you can, for example, you can opening balance is 10 lakh, closing balance is say 8 lakh. Give additional information during the year company issued rupees 5 lakh worth of debentures. Then in that you say that the company is going in for conversion of debentures. In the redemption of debenture itself, we can bring conversion also. In that case, we have to ensure that equity share capital is increasing. Equity share capital or preference share capital or a part of new class of debenture is increasing. That way we can bring in new concept also. Anything we are trying to make the students understand the concept. That's all. Please don't test all these things without you teaching in the class. Fine. Any type of concept you can try, but please teach in the class. Fine. As a revision, and to the best possible way during revision classes, create your own questions. Fine. We can, once we are very much thorough with the concept, we can test the students with any number of questions. Equity, in the share capital, you can create any number of questions. Debentures, you can do anything. In collateral security itself, you can bring in the debenture concept itself. One particular thing, company issued 10 lakh 8% debentures of rupees 100 each. You start that way. With that, you bring in that 8 lakh rupees, the company is bringing in collateral security of so and so, purchase consideration of so and so. For cash, how much is issued? That way, we can combine the whole thing and make it one as a case study question. Now, for the term 2, you have debenture as a 5-mark question. It will be definitely useful if you're going to create questions like this. Okay. So now coming to the next one. So premium on redemption of debenture is done. Then when new shares cannot be issued at a discount. That's a typographical mistake. When new debentures are issued at a discount, the discount amount is subtracted from the source concerned. The flip side of it is, please remember, the same condition holds good when the debentures are issued at a premium also. When shares or debentures are issued at a premium, they are not shown separately. They are added to the source concern. When you subtract the discount, same way, you will add the premium also. And please remember, underwriting commission. This is one area. Underwriting commission is a commission given to the brokers when they give the guarantee that shares and debentures will be subscribed duly. So that underwriting commission will happen only for the issue of shares and not for the issue of debentures. Debentures, debenture holders will definitely invest money in debentures because they know pretty well that they are always secured debentures. No company in India can issue unsecured debentures. All debentures issued in India are secured against the assets of the company. So that being the case, company need not go for any underwriting with any of the brokers or commission agents or bankers. For sure, debentures will be duly subscribed. And if the debentures are undersubscribed also, there is no provisions of Companies Act about a refund of the application money, etc. Only in case of equity shares, you have, in case of shares alone, we have the issue of under subscription. Minimum subscription not received means the company has to refund the application money and give back the money, etc. But that condition is not there for equity shares. I'm sorry, that condition is not there for debentures. So the company can as well allot the debentures even if minimum subscription is not received. So underwriting commission issue comes only for equity shares. So give instructions to your students that engage in a question if you are given underwriting commission, that should be subtracted only from share capital. Right. Then coming to next one is short-term borrowings is to be treated as financing activity. That is continuation of bank overdraft and cash credit. It is implied that it will be treated as current liability. Sorry, but it will be treated as financing activities only. So inflow will be added and outflow will be subtracted from cash flow from financing activities. Fine. So the probable ledger accounts to be opened, provision for tax account. I think provision for tax account accounting treatment, I think you are comfortable. If only 1 year figure is given, how to do? Can I revise it fully?
Please, ma'am.
Okay, fine. Now again, I'm using the board. So, accounting treatment of provision for tax. case 1, when only one information is given. Case 2, when 2 years information is given. Case 3, when 2 years information is given and additional information is given. Okay. I have taken 3 cases. In case 1, only 1 year information is given. So it will be case 1 added as extraordinary item and shown as outflow from operating activities. Can I go to the second one?
Yes, ma'am.
Lavanya?
Yes, ma'am.
Fine. So the second case, when 2 years information is given, current year's information, current year's provision will be added as extraordinary item and base year's provision will be outflow from operating activities. Outflow from operating activities. In case in that question, suppose you have this one, suppose you have tax refund. Suppose you have tax refund, then you have to take the net effect of tax refund. That is amount of tax to be paid minus tax refund will be shown as outflow from operating activities. Yes.
Yes, ma'am.
The third case, you are given that when 2 years information is given and additional information is given, we need to open provision for tax account.
Lecture.
Let us open provision for tax account.
Right.
Buy balance brought down. Opening balance. And that additional information may be either tax paid or tax provided. Fine. So, what happened, Pratibha? You forgot.
Yes, ma'am. Om Shakti, ma'am.
Om Shakti. I told you, afternoon also I said we'll meet at 4 o'clock. The message. That's okay. That's okay. Don't get tensed. I will share the PPT to the HO. They will share it to you all.
Okay, ma'am. Thank you so
Okay.
much.
No,
Yes.
no tension, Pratibha. I could see the tension on your face. Don't worry. Don't worry. Okay. Anyway, the slides are there. I will share this PPT to my HO.
Yes,
Your school can request for this.
yes, ma'am.
Okay. So,
Yes.
buy balance brought down, opening balance, to balance carried down, closing balance, plus Any one may be information that is given to you. When 2 years information is given and additional information is given, this additional information may be tax paid or tax provided. So you will have to bank balancing figure, tax provided, or by statement of profit and loss,
Paid.
by statement of profit and loss, tax provided. So which case you will either have tax provided as a balancing figure or tax paid as a balancing figure. Tax paid, sorry, both areas I have written as provided to be tax paid. So tax paid or tax provided will be the balancing figure. So if it is tax paid as a balancing figure, this will be taken as outflow from operating activities. Or if it is tax provided, this will be added to extraordinary items. This will be added to extraordinary items. Securities premium reserve account. What are the possibilities when we will open securities premium reserve account? You have to now insist upon provisions of section 52 of the Companies Act, which deals with issue of shares at a premium and uses of securities premium. Fine. These are all advanced learning. We need to train our students for all these things. Board does not say this is advanced learning, this is a basic learning, etc. Fine. It is well within the concept. We are only going to test the students within the concept. Okay. Now, securities premium reserve account, when are we going to open? Please recollect the uses of securities premium. Just a minute. Amma phone adikkudu par. So uses of securities premium. Number one, to issue fully paid up bonus shares. To issue fully paid up bonus shares. Okay. So that way we can make use of this securities premium reserve amount. Fine. Number two, to write off capital losses like premium on redemption of debentures or discount on issue of debentures. Fine. So take for example, you are given the balance sheet, extracts, reserves and surplus, reserves and surplus you have. No, before that you take it as share capital. Share capital is 20 lakhs, 25 lakhs. Reserves and surplus, within bracket you take it as securities premium. Within bracket you take it as securities premium. So you have opening balance 4 lakh rupees, closing balance, say you have 8 lakh rupees. 8 lakh rupees. Fine. You are given, okay, wait, 1 minute. I'll just make small correction. ₹4 lakh and you take it as 5 lakh. Then you have 8% debentures Opening balance 4 lakhs, closing balance 1 lakh. You are given additional information. Equity shares. One minute. I'll just make a correction there. During the year, the company issued equity shares for cash rupees 3 lakhs and for purchase of asset rupees 2 lakhs. I'll just make a small correction here. If I have to include all the concepts, then we need to have some more changes. I'm just trying. Okay, security premium is 2 lakh rupees. Okay, then you are given. Now, 1 minute. I'll just change 1 minute. So, here. Okay, fine. So keep it as the same 4 lakh rupees. Keep it as the same 4 lakh rupees. Okay. During the year, the company issued equity shares for cash rupees 3 lakh and for purchase of asset rupees 2 lakhs. This is adjustment number 1. Adjustment number 2. Shares were issued at a premium of 10%. Number 3, 8% debentures were redeemed at a premium of 10%. Adjustment number 4, the company uses the balance available in securities premium account, balance available in securities premium account for writing off capital losses. The first case, please read the question very clearly. During the year, the company issued equity shares for cash rupees 3 lakhs and purchase of asset rupees 2 lakhs. So that means there is consideration for cash, consideration other than cash. Two concepts I have introduced here. Fine. So I'm just clearing the additional information alone. Please give me the input for me to teach. Lavanya, I think your video is frozen, Lavanya. Yes, your video is frozen. Now I think it is all right. Okay, now noted down all the information, isn't it? So for the first one, we are going to prepare securities premium reserve account for these purposes, for covering up all these things. So during the year, the company issued equity shares for cash rupees 3 lakhs and for purchase of asset 2 lakhs. Shares were issued at a premium of 10%, whereas 8% debentures were redeemed at a premium of 10%. Then the company uses the balance available in securities premium account for writing off capital losses. So all the input required for securities premium is given here. Fine. So I'm just going to open securities premium reserve account. Now, the first one, you're given the first one that the company is offering shares. So I'm just going to open securities premium reserve account. Buy balance brought down. Opening balance is 4 lakh rupees. To balance carried down. The same 4 lakh rupees. But you are issuing shares at a premium. Buy equity share capital account. I'm so sorry. Buy bank account. Buy bank account is going to be 30,000 rupees. Please recollect my, see my question. Out of 5 lakh rupees worth of shares, 3 lakh are issued by cash and 2 lakh for consideration other than cash. To the extent of 3 lakh alone, you will have an effect in the books of accounts. So only to that 3 lakh rupees will you be receiving the securities premium also. 2 lakh rupees is going to the extent of issue of debentures for issue of cash for consideration of issue of shares for consideration other than cash. So you will not have any effect of that in the books of accounts. To the extent of 3 lakh rupees, there will be inflow. And for that, you are issuing the shares at a premium. So buy bank 30,000. Now look at the final information that the company writes off losses, capital losses in the same year against the securities premium reserve account. And you are given that the debentures are redeemed at a premium of 10%. Now debenture opening balance is 4 lakh rupees and closing balance is 1 lakh rupees. So 3 lakh worth of debentures are redeemed at a premium of 10%, which is 30,000. So 3,30,000 is the value of debentures redeemed. So that amount you are going to write it off to securities premium reserve account. So you have here to premium on redemption of debentures account 30,000. That's all. This is opening of securities premium reserve account. I think opening of Lavanya, are you there? Yes, yes.
Yes, ma'am.
Okay, okay. So opening of fixed asset account and accumulated depreciation account, I think you are used to it so far.
Yes,
Yes.
ma'am. We have used,
So
ma'am.
can I go to the last one, share capital account?
Yeah, ma'am. Yes, ma'am.
Okay, we'll go to share capital account. So opening share capital account, you can take two example. Equity share capital 16 lakhs, 30 lakhs. These are all concept based questions. Securities premium reserve account. Securities premium reserve account. Eight lakhs, 4 lakhs. additional information. During the year, the company, point number 1. During the year, the company issued bonus shares of rupees 4 lakhs. Number 2, during the year, the company purchased an asset worth rupees 5 lakhs for which shares were given as purchase consideration. The third case, in the third adjustment, during the year, the company bought back equity shares of rupees 1 lakh. So in share capital itself, how many things have I brought in? Only one share. This can be tested easily as a 6-mark question. Completely. Can I clear the board?
Yes, ma'am.
Noted down all the adjustments.
Yes, ma'am.
Okay, fine. So equity share capital is increasing from 16 lakh to 30 lakhs. That means there is an increase to the extent of 14 lakh rupees. Fine. Adjustment number 1, company issued bonus shares to the extent of. Now, the final question you take, then only you will understand. Please write the final question. Identify the, or calculate the cash flow from or cash used in financing activities. Okay. So we are going to prepare share capital ledger. Share capital ledger to give effect to all these things. To give effect to all these things. So the first one, company is issuing bonus shares to the extent of 4 lakh rupees. The increase in share capital from 16 lakhs to 30 lakh rupees. Totally there are 14 lakh rupees increase. Fine. But out of that, 4 lakh is by way of conversion of reserve into share capital. So there will be no flow at all. The second one, during the year, the company purchased asset worth rupees 5 lakh for which shares were given as purchase consideration. So 5 lakh worth shares are issued. So out of the total 14 lakhs increase, 4 lakh is by way of bonus shares, 5 lakh is by way of purchase consideration. Totally 9 lakh is gone. Fine. Remaining 5 lakh is there, but it says the company bought back equity shares of 1 lakh. That is after paying back 1 lakh worth of equity shares, still the share capital is increasing. That means the balance is by issue of equity shares for cash. Okay, one single question, how many adjustments you see? Okay, so now I will open the ledger account, share capital ledger account. I hope all of you have noted down these things.
Yes, ma'am.
Yes,
Okay.
ma'am.
Okay, thank you.
Two banks.
So open share capital ledger. Buy balance brought down was 16 lakhs. To balance carried down 30 lakhs. Buy securities premium reserve account. This is for the first adjustment. Buy securities premium reserve account. How much has been issued? 4 lakhs. 4 lakhs. Fine. Then buy vendor account. Shares are issued for purchase of asset. 5 lakh
5 lakhs.
rupees. Okay. Then to bank buyback of share.
1 lakh.
1 lakh. So balancing figure will be by bank. To this extent, whatever you are getting the balancing figure, that alone by cash the company has raised the money. So that's going to be please check if I'm right. Did I give any other information? What happened, Lavanya?
Ma'am, 6 lakh will come now.
That's what. That's what I had a doubt. Somewhere I have made a totally mistake. This should be by bank 6 lakh rupees. So this alone shares issued for cash. Fine.
Yes.
So today we have gone in depth into cash flow statement in different ways that we can do.